Stick around for some great tips on how to get pre-qualified for a mortgage. Hey there, Brandon Lewis here with Integrity Home Mortgage. Wanted to thank you for stopping by the channel and checking out some great mortgage tips today. As always, we're bringing valuable information to help our clients have a smooth mortgage process and taking as much pain out of that process as possible. So today, we're going to talk about some tips when getting pre-qualified. All right, before we start the topic real quick and get into the details of preparing to pre-qualify, let's click that subscribe button. I want to make sure you always get our great tips and helpful information going forward. So again, please click that subscribe button. Click that little bell as well. That'll make sure you're getting notifications for all of our up-to-date posts. And we're posting as much information as we can at least twice a week. All right, let's jump into the tips. Now, when you get pre-qualified, this is the very first step of the mortgage process. This is when your lender is going to ask questions about your income, your employment, your assets, information to pull the credit report with your permission. So this is a very important time that you are prepared with the right information about yourself. You'd be surprised how many people may not know what their salary is or some other details. Definitely a situation that you do need some preparation for, and it only leads to a smoother process. During this process, the lender is going to give you a couple options on how to submit your loan pre-qualification. Generally, they'll invite you into the office, do it face-to-face, one of my favorite ways, over the phone, or have you submit it online through their secure website. So whichever works best for the client, they're all fine with us. The key thing though is that we need to have a very important phone call about your home buying goals. Great now that we have all your income information, employment information, asset information, but I don't know where you want your monthly payment to be. I don't know how much money you want to bring to closing. So these are key questions. If your lender's not reviewing what your goals are, it's time to move on to another lender there. So with my clients, we're going to sit down, we're going to talk about, well, what's your goal in terms of out of pocket? How much are you trying to bring to closing at the end of the day in regards to your down payment and any closing costs? Also, and most importantly, is the monthly payment. This is the budget. We don't want to set you up for failure. We want to set you up for success. So let's figure out where we're trying to keep that monthly budget. And from there, we can determine what price range home you should be shopping in to give you that comfortable payment. To me, that's one of my most important steps, is having that conversation with the client about their goals, because it tells me how to structure the loan and how to get these initial numbers out in line with your particular goals and not just shooting in the dark as some lenders do. Now, during the pre-qualification process, we're going to look at a couple of different areas here. So first, let's talk about credit. With your permission, we're going to gather your social security number and pull an updated credit report. So if you have any derogatories or negative marks on your credit report, now's a good time to bring them up to your lender. Honesty with your loan officer is always the best policy. So throw out that information to your loan officer, let them evaluate everything and make sure that you are meeting the guidelines and going to truly have a smooth process. So if you've had a bankruptcy in the past, a foreclosure, or a short sale, definitely mention that at the time the lender is collecting your information. All right, at that same time while reviewing the credit, the lender may ask you for questions about or explanations about why a payment was late on an account or why an account went into collections. This is so we can craft a letter of explanation explaining that reason why a payment was late or an account may have gone into collections, and present that to the underwriter ahead of time. So being proactive definitely pays off on the underwriting experience as well. The next part that we're going to look at in terms of your pre-qualification is your income. What sources of income do you have? Are you employed, self-employed? Are you receiving Social Security, possibly VA disability? There's all sorts of income that we do need to document and verify for the process. So know the details of your sources of income. We're going to talk about whether you're a W-2 employee, whether you're self-employed, sole proprietorship, or an S corporation. There's a lot of details that we have to dive into in order to calculate your qualifying income. This is extremely important because this is one of the biggest pieces of the puzzle when putting together your loan qualification. So we need the most accurate pay information. If you're a W-2 employee working 40 hours a week, that's a pretty easy one. We're going to collect that hourly wage, times 40 hours a week, calculate that qualifying income. But if you're commission-based, how do we calculate that? Well, guideline states you have to have a 2-year history, and we average out over the 2-year history. Same deal for your self-employed, same deal if you want to use rental properties as qualifying income. Just be prepared of your sources of income, know where they're coming from, how much they are, and be prepared to send documentation to back this up. Keep in mind, somebody that's a W-2 hourly wage employee is going to get a much faster pre-approval than, say, the self-employed home buyer. Reason for that is your W-2 employee is a pretty simple, straightforward pre-approval. When you're self-employed, of course, we have to dive into those tax returns to calculate your qualifying income. Self-employed do allow for an extra day or two for the pre-approval, and that's just to make sure the lender is doing their due diligence to make sure you are truly pre-qualified. The last section we're going to talk about is your assets, money in the bank. We're going to start with your local deposit accounts and work our way up through investment and retirement account. We're not looking for just funds that you're going to use for your down payment or to cover your closing costs, but cash is king, and any money in the account will add strength to your application. It's critical that we do want to list that 401k or that retirement account. Although we may have no intentions of touching it, it adds a lot of strength to your application. Definitely disclose all assets to us and let the lender cherry pick which ones will add the right amount of strength to your application without creating any extra hoops to jump through. Just to recap real quick, be prepared of your own personal situation. Know your credit. Have you had a short sale, a foreclosure, or bankruptcy in the past? Be prepared to share that with your lender early in the process. Know your income. Know what your sources of income are. I've had clients that literally did not know what their salaries were until we received the written verification of employment back. So things like that will slow down the process. So know the details of your pay, whether it's a pay stub, self-employed, Social Security, VA disability, and that only sets you up for success. All right, then again, the last part is the assets, right? So the money in the bank. Not only are we gonna wanna verify the funds that we need for closing, but again, assets are king, or cash is king, as we say in the business. So we wanna make sure we're not depleting all the savings and that you do have sufficient funds remaining in an account that you have access to. So as I mentioned, this is one of the most important steps out there. And I hear a lot of horror stories about lenders not asking questions. For example, they need to ask standard questions like, have you had a bankruptcy? Do you pay child support or alimony support? Things like that. Imagine if the lender didn't find out you had a $500 alimony support payment for the next 10 years. And imagine how that may impact your debt to income ratio and the loan qualification. So you definitely want to disclose all liabilities and make sure you're working with a lender that's asking those right questions. Again, if they don't ask you at the time of pre-approval, these are key things that can cause a deal to blow up behind the scenes. All right, as always, we thank you for your support. Thank you for spending a couple minutes with me and talking about how to have a smoother pre-qualification process that'll ultimately lead to a far smoother mortgage experience. Hit me up with any questions. Thank you for your support. And again, this is Brandon with Integrity. I'll see you on the next mortgage tip.